Morning, everybody. Welcome to the morning show here on Stock Market TV. The dock is chock full today of stuff, a lot to get to. Ari Wald is the guest who will join us at 9. We'll have mornings with Mary on at like 9:40 or so. So share some of her highlights from last week in Sonoma. And like I said, the dock is full. We got a lot to get to. So let's get the show on the road here. Roll my intro, please. Let's go.
You know, there's a difference between men and women. They're just different.
It's true.
And I just got to get it off my chest. I got two boys that are 1 year old, and I got a 3-year-old daughter and a wife. When the women are not in the house, the way the boys act is so different. It's unbelievable how different the behavior is when the women are out. And then the women get back in and they're crazy. Crazy gets back, right? Crazy gets back. And then, you know, the girls are away. And yesterday it was just me and the boys. Oh, they're like so relaxed. They're so chilling. It's fascinating watching human behavior at such a young age.
What did you guys do?
Hold on. We got an echo. You hear that echo? Spencer, is that you?
It's awful.
Yeah, come on, Spencer.
There you go. I don't. What are you talking about?
Come on, Spencer. No, yeah. Listen, it's a fascinating concept. I just wanted to share that with you guys. That I'm just observing human behavior. We do this for a living every single day. We are analyzing the behavior of humans, trying to take advantage of human flaws to extract money from the market for our own selfish reasons, right? And those human behaviors you could see from a very young age. It's fascinating. It's fascinating. So for traders and investors all over the place, understand that what we're doing here, we're not analyzing company fundamentals. We are analyzing humans and trying to take advantage of that.
You guys are going to have some epic boys trips in the future.
Yeah, I think so, because like the Canes are playing Syracuse, for example, later on this year. My wife has no interest in going. My daughter doesn't even know what that is. But me and the boys, theoretically, not at 1, but when they're a little bit older, would be fantastic, right?
That's right.
Yeah, epic boys trips. So
Yep.
How are we looking? How are we sounding? Are we sounding good? I think we're sounding good when Spencer's not around, right?
Yeah. It's you, Spencer.
It's you, Spencer.
Sorry, I had a tab open that was playing the show. I didn't even realize it. So all good.
Spencer, first timer, buddy. First time here, huh?
Yeah. Anyway.
All right. Hit it.
Chewy. Yes, Caesar.
All right. So Dow futures getting the crap kicked out of them this morning, down 250 points. S&P futures down 40 points. That's 70 basis points. NASDAQ futures leading the way lower today, down 80 basis points. Bond futures down again as this bond crash continues, whether it be a slow crash or a fast crash. A crash is a crash. Down another 40 basis points for 30-year futures this morning, down to 115 and change. 10-year futures down as well. Crude oil up again, back above 80 for crude oil futures, up about 50 cents this morning. Copper futures around 480, down 1% and change. Gold down 60 basis points, down to 23.65. Silver down a little bit, hanging in there at 32. VIX back up above 14. Interesting action there. So over in the old funny money, you got Bitcoin. So Ethereum down 1.3%, down 50 points, 3,800 ballpark. And then you've got Bitcoin, BTC, USD. Where are we? Down almost a full percent, 67,600. And for some reason, my thing keeps getting cut off here. I don't know why it keeps.
Does it keep disconnecting?
Huh?
Does it keep disconnecting?
It does. I'm not sure why. So here the Solana is down 70 basis points, 167 for Solana. And then total crypto market cap, Spencer Israel. We're looking at, what are we looking at? We're looking at 2.47 trillion for total crypto. So hanging in there. Any thoughts on the futures, Strazza?
Yes. If you look starting on May 15th, when every one of the major averages made a new all-time high, look at the performance since. 3 different paths. NASDAQ grinding higher. I'm going to make a little perf chart so we could show it.
Little perf chart.
S&P just pretty much straight sideways since that new all-time high. And Dow's getting blasted.
Yeah, transports look even worse, huh?
Notable weakness from healthcare. Not just yesterday was bad, but it's been going on. All the big names, I think that's weighing on the Dow a lot. Right? UNH, it's Merck, it's J&J. I don't know.
Throw the Spencer, throw up slide 2, and then we'll do slide 3. Slide 2, here's the geometric index. This is the value line. This is the median stock. You know, because some people, you know, if you own a bunch of Nvidia, or maybe you're just looking at some of the major indexes or the headlines, you might think how strong the stock market has been. The median stock really hasn't done anything all year. And then when you scroll down as well to the next one, Spencer, you're looking at high beta stopped outperforming low volatility. Junk bonds stopped going up. Small cap stopped going up. All of this was last year. All of this stopped going up in December. We are now almost in June. And if you're wondering why this is the case and what's been the headwind for a lot of these things, it's the next chart. And that is the bond market crashing. In my opinion, that has been a major headwind for the market to make any progress, right? Japanese yen also continuing to decline all year long. Maybe it's a coincidence. Maybe high beta stopped outperforming when bonds stopped going up. Maybe that's just a coincidence. Maybe small caps stopped going up when the bond market stopped going up. Maybe that's just a coincidence. I don't know. I don't think it's a coincidence. I think that this is a bigger deal here. So I think it needs to be front and center. No?
Yeah. I mean, I still think small caps get it done. High beta gets it done.
Well, when? Well, you could have said that 3 months ago.
Could have said it all last year. People still made a lot of money in stocks. It's almost like a different world for small caps. They're playing a different game than the big boys.
Yeah, small cap tech, really got hit hard, man. Small cap had a 14% correction. It came back nicely, by the way, which is certainly impressive. A 14% correction for small cap tech, which, by the way, there might be the most amount of stocks on the Russell 2000 might be the regional banks and biotechnology. Both of those two groups have over 200 stocks. But the largest weighting in the Russell 2000 is actually technology.
Bios got spanked yesterday too. And I don't know if financials are getting crushed.
Who said financials are getting crushed?
No, just comment in the chat. But they've come off really good, and this is a failed breakout for XLF, right?
I mean, it's not just a failed breakout. XLF is getting back to those former highs. You know what I mean? Back to the former highs from the prior cycle. So the fact that they're struggling near these levels, I mean, I just don't think that should be a surprise at all.
I mean, right? Stuffed again though, twice. What? Yeah, but just absolutely stuffed by the Bears for the second time since early April.
Yeah, I mean,
Spencer, get off.
Spencer, just leave. Out. Yeah, please. Come on. Every time you're on, everything gets terrible.
Really?
Come on, Spencer. Come on, Spencer. Poor Spencer.
I love.
Are we mean to Spencer?
My mom says yes.
Your mom says we're mean to Spencer? At the Portfolio Accelerator last week, they said I was mean to Spencer too.
Spencer's my mom's favorite. She doesn't like you or I.
Well, I like your mom better than you anyway, so we all agree. What do we make of these cryptocurrencies here? We had some conversations about this over the week. I think this is the biggest deal. Spencer, throw up slide 2. This is the one for me. It's been the one for me. I mean, I think this tells the whole story better than anything else. This is all of the
yes.
This is it.
Yeah.
And the outperformance out of Binance, the fact that Binance looks the best of all of these,
Hey,
you know,
good chart work, buddy. This is the story.
this isn't me. This was Sam. I think pretty sure this was Sam.
Yeah. Well,
Big ups to Sam.
Sam's a superstar. Look out for Sam in crypto too. Sam's got an eye on the cryptos. As these resolve, it's go time. And the best ones, you talk about your bonk and your pet base, and they're going, but now other ones that are not meme coins are going too. So I think we're getting there. Louis even mentioned the other day in the chat, we're getting some sort of breadth expansion for like the first time this year.
Yeah, I mean, listen, we're seeing stocks making new 10-day high stocks. Freudian slip. We're seeing tokens making new 10-day highs, new 30-day highs,
and some overbought readings. I mean, for the first time in a long time. Yeah.
Throw up slide 2 there, Spencer.
This Binance just continues to amaze me. I think I just have to get involved at this point because I love relative strength. I don't understand why their token has been so resilient, right? Like even through the bear cycle, right? Remember Binance? Like they were fine, even through all the FTX mess and stuff. But it looks like one of the best cryptos right now. It's going to be one of the first back to new all-time.
What about Pepe's best friend, Brett?
I don't know Brett. I don't know anything about
we talk about it all the time, dude. This is almost $1 billion in market capitalization.
We have too many Bretts. I can't keep track of all the Bretts. Now you're giving me another Brett. We already have too many Bretts.
Dude, we have so many Bretts. We lead the league in Bretts on our team. I mean, seriously, though. I mean, how many Bretts did we have in California last week? It was out of control.
Too many Bretts. No,
too many Bretts. But listen, at least we like, we got the best Bretts. But this is a good Brett right here. Brett with 2 T's, making new all-time highs. So, I think this gets back to, if you think that, if you're looking at a cryptocurrency, you're looking at a token and you're wondering, oh, is this going to break out to new highs? What's this going to do? Look around. What are the other ones that look like this doing? Right? That's bigger than this. I mean, I'm long and I'm thrilled about it, right? I got the old 60-40 portfolio, Pepe Brett going.
But you're just trading these things, or you plan to just own them until the cycle ends? Because you're in a lot of.
I mean, I'm in.
They all move together,
What's that?
They all more or less move together too, right? So like,
no, they haven't been moving together at all. Actually, I mean, they have the last couple of days. Like the MOG is moving now. Pepe took off first. I mean, they're not all doing well. The Geo Bowden looks terrible. So I mean, they're not all doing well. Bonk made new highs.
All right.
Look at Book of Memes. Still down near lows. Look at Floki has shown relative strength. The Pobcat has shown relative strength. The Muse still struggling. Baby Doge still struggling. Shiba still struggling. So no, I think I think you want to be selective with your meme tokens.
From like a fraud standpoint, these aren't the bad ones either. I know that they're funny, right? But these are, at this point, a lot of them, just look at the market caps. You have to assume or treat them as innocent until proven guilty. Like there's a sense of legitimacy to these tokens just due to the size of them at this point, right?
To be fair, I'm not qualified to know whether one of these is a scam or not. I'm not qualified to tell you whether one of these stocks that are making new highs is a scam or not. I'm not qualified, so I don't really care. I hope it is a scam, to be honest, because the scams really do well for quite some time. So if I'm long, I don't, and I make money, I don't have to give the profits back just because it's somebody else's scam. So I'm hoping it is, to be honest.
But this isn't one of those ICOs that got cooked up in a dorm room. Okay, it wouldn't be this big. It's not that. That's the real problem with a lot of these new tokens. So they're not that. There's a comment in the chat saying they buy back their token, they keep it from going down. That's what good equities do too. They buy back.
See Apple. Let's get back to slide 6 here. Get back to the TradFi, right? Bring it back. Bring us home.
Bring us home. Yeah, go ahead.
Me and Strazza, OG TradFi bros, can't have a legit conversation about equities without talking about the bond market. I keep being told that this is not a bond market crash because bond market volatility is so low. I see line go down, Strazza. Line keep going down. How are we thinking about this?
Bonds are catching lower to yen right now.
Bonds are catching lower to yen. Seems like they're both going down together now, right?
Bonds. No, I think bonds have been resilient in May, right?
Bonds were resilient in May. They had a nice bounce. Yeah. So did yen.
Up until yesterday, they were looking okay.
Yeah. And now they're rolling over again because the trend remains down, right?
The trend remains in place. Yeah. Yeah. I don't think too much about this at this point.
Here's what I got. Throw up the news slide too, Spencer. So this is kind of like a short-term look to Strazza's point, the bounce in May. I think this is a big deal. So what do we got? We got a key level here going all the way back to last summer, right? That turned into support in Q1. That broke down in April, and now we just retested that former resistance and are now rolling over again. No?
I think you draw the range larger, and a resolution from the upper or lower bounds, that's what matters. We're just stuck in the middle still of this thing. Same with the dollar.
Stuck in the middle of this range, probably, let's call it, over the last 9 to 10 months.
Yeah. And the dollar's the same way, right? Like, I don't care too much about what it does today or tomorrow or even next week. Like, take out the upper bounds with authority or break down, beneath those pivot lows. That's when I think you start to see more of an impact from these intermarket trends.
All right, let's throw up the new slide too, Spencer, the one with the Dow. So this was a question that I presented last week in Sonoma. Really excited to hear Mary's thoughts on Sonoma. One going up, one going down. Now the one on top potentially catching down to the one on the bottom. I don't know. Major market turning points in the past. Major tops have historically, in many times, come with divergences just like these.
Yeah.
Is this time different, Mr. Steve? Is this time different?
I wish you would stop asking me this question.
Why?
I think it's just on
for the record, I'm always going to ask you this question for decades and decades to come.
You
know why? Because I was told not to fight Papa Dow. Do you know why I was told not to fight Papa Dow? Because I used to fight Papa Dow. That's why. I was dumb and I was stupid.
The right way to answer this question is I'll let you know, right? And for now, I don't have to own transports as a vehicle to express my bullish thesis. I'm going to own none of those. And I could still own some of these Dow stocks or charts that look like the Dow because they're leaders and they keep working. Maybe the industrial average and the rest of the entire broader market eventually catches down, looks more like transports. We'll see it in price and we can protect ourselves then. I don't know for now. The weakness from transports is still kind of on an island with a small handful of other bearish data points. Would you agree with that?
Hold on. So are you thinking that, throw up the new slide too. So are you thinking this? Is this what you're thinking, Strazza? Are you thinking, give it to him, Spencer. Are you thinking 2 out of 3 ain't bad?
That's right. There's too much of this.
Too much of what?
The top 2 and not enough of the bottom one.
There's too much of the top 2 and not enough of the bottom one, which you're saying is a good thing.
Yeah, right. So I'm not gonna weigh too heavily, a single bearish data point when home builders look good and the semiconductors look good and the broker dealers are breaking out. I know we just mentioned financials putting a failed break, but they've been trending well. So we'll continue to weigh the evidence. This is just one piece of it. It's an important.
For the record, home builders are at the same level they were on December the 14th when the New York Stock Exchange new highs list peaked. So
yeah, they came in pretty good, but home builders are high beta.
Again, home builders are at the same levels that they were on December the 14th when the new highs list peaked.
Yeah.
Correct me if I'm wrong. That's 5.5 months. That's almost 6 months of nothing.
Dude, the chart looks great. Come on. Home builders are so
far. I'm saying anything about the chart. I'm saying the home builders are at literally the same level they were almost 6 months ago.
No, they're not. I'm looking at XHB. It's the same level as March. I don't know what the hell you're looking at, dude.
The ITB, which is
God.
Oh, you want me to look at the XHB instead?
Cherry picker. I mean,
I just looked at the ITB. No, you're right. The ITB looks better. All right. Excuse me. The XHB looks better. All right. You got me.
I think
so. The home builders index that doesn't have any home builders in it looks better than the one that does. Is that what you're telling me?
Little short term.
So the one that you are not cherry picking, because I'm the one doing the cherry picking. So just to be clear, the one that you are not cherry picking, which is the XHB, which is the Home Builders ETF, where Williams Sonoma is the biggest fucking component.
Yeah.
And then something called Train Technologies.
I
and
don't
then
make
Carlisle companies, and then Owings Corning.
Yeah.
I don't see any home builders. Oh, wait. Here's Pulte Homes coming in at a monster 3%
Is
waiting.
this XHB that you're reading off?
This is XHB. This is the one that you are not cherry picking, right? Because I do the cherry picking around here, apparently.
That's just the one I use. So
right. So the XHB, again, the quote unquote Home Builders ETF, largest component, Williams Sonoma.
Hey.
And then when you go to ITB, which is the Home Construction ETF, what do you know? There's no Williams Sonoma anywhere to be found. You actually do have companies that build homes. You've got DR Horton coming in at 14%, Lennar at 12%, NVR at 7%, Pulte
Let me
at
ask
8%.
you a question about this chart. What would you have said about this home builders chart back in, I don't know, October of last year?
Which home builders chart? First
Either
of all.
one.
What would I said when?
In October of last year. We were talking about like we are now, but it was October of last year. You'd be looking at that chart. Would you be saying nice things or mean and scary things?
In October of last year?
October of last year.
What would I have said?
Yes. What?
I would have said that it was a laggard, because it was.
Okay.
Until it finally got back above those 21 highs, it was a laggard. Yeah. I mean, because think about it, those home builder ETFs didn't make their lows until the end of October.
The point
The
I'm
leaders were already going up for most of October. Like Microsoft, for example, was ripping. I think Microsoft was up like 7 or 8% just in October of last year.
Point I'm making is that during corrective phases, even in the context of primary uptrends or bull markets, so July through October of last year, home builders can and will correct pretty hard, right? This is a beta group. So you're going to get that. In fact, from July to October of last year, the XHB was in a almost bear market. It was down 19%. And boy, that would have been a great entry. So I think we end up looking back eventually later on this year, probably sooner rather than later, and say, oh, wow, another failed top for the homies. That would have been a great buying opportunity.
Maybe. I'm just telling you that their home builders are at the same price that they were in December.
I know you love making that point about things being at the same place that they were like sometime longer ago.
I'm just saying it's an interesting look when you look at the new slide too there, Spencer. So home builders, obviously one of the largest and most important components of the consumer discretionary space, of course, as we are quite familiar. And consumer discretionaries on both a market cap weighted basis and an equally weighted basis, making new 52-week lows relative to the rest of the market. In fact, on a market cap weighted basis, making new 10-year lows. Should we not care about this one either, Mr. Strazza?
In the past, this has been a really bad sign for the broader market. The discretionary ratio has looked something like this before every crash and even just bear cycle. You could zoom out to the birth of the spider funds, and that's been the case. So I don't love it. I think this damage needs to get repaired ASAP, to be completely honest. I don't like this. If you were showing me something about staples relative or utilities relative or real estate relative, I'd say, I don't know. But discretionary, this has been a good one throughout history. So,
discretionary pre-market down another %, by the way.
Listen, I care more about this than transports.
I was going to ask you, what do you think is more important, the discretionary or the trannies? My suspicion would have been, because you've been dismissing trannies for quite some time.
Yeah, transports. They're just not the most sound, economically sound companies. They're just not great business models. They're highly cyclical. Sure, they should do well during bull cycles or at least boom cycles for the economy, but I don't know enough about these companies to overthink them. Discretionary stocks, particularly these large cap discretionary stocks, even when you equal weight them, seeing this kind of weakness in the middle of a bull, it's not what we would expect to see. So
long dicks, as mentioned in the chat, continues to work.
Long dicks always works. Yeah.
There are parts in consumer, as shitty as consumer. Throw up slide 2. As shitty as Dick's, by the way, up 8% here pre-market. Spencer, can you weigh in here and let us know what the big breaking news is here that makes the long dicks
And then
so
I've been
attractive.
boots on the grounding too, so I can say some stuff as well.
Well, before I talk, do I have an echo or did I fix it?
No, you're fine.
Oh, that's
Are we good? Are
That's
we
a
good,
relief.
Spencer?
All
Wow.
right. Okay, Dick's
6:30.
earnings this morning, pretty good. EPS, very nice beat, $3.30 versus a $2.95 estimate. Sales also
Wow.
a nice beat there. They also raised their outlook for the year. Obviously, we like an earnings beat, but we like a guidance raise even more. So they raised the bottom line EPS numbers for the fiscal year, and all that comes out to a 8% move this morning.
I like what these guys are about. I got the app. I use it a lot. I just got some new Nikes. I got 4 cases of golf balls. Always shopping the deals at Dick's. They do a great job. They send me push notifications when there's like a buy 2 get 3 golf ball deal or something like that, and it's free shipping.
Because you
And
see,
then I get
Strazza
the
needs to
Galaxy
always have a
also.
lot of golf balls,
Right.
right? Just constantly
I shot a
replacing
70
them.
I shot a 78 on Sunday. Actually, a 79 if you count my mulligan on the back.
Wow,
Club Pro and it's
Strazza.
hard. Yeah, I was just on, dude. My friends don't even believe me.
I don't.
No, it was real. I played with one of the club pros.
Was he giving you tips?
No, he gave me lessons before, and then he's like, "Hey, you want to go and play?" We did it, and whatever it was, I was just like channeling him, and what he was saying to me was just fantastic.
You know, I could take lessons at the local club, not the fancy club, but the other club for $40.
That's really cheap. I would take
I
advantage.
know.
I think I pay 100 for an hour.
I know.
Yeah.
At the nicer club, it's a lot more than that. So I think I'm going to start taking lessons at the other club.
They help so much. They just tell you the foundational stuff, and they just help, and then you figure the rest out on your own.
Are you still playing those Pro V1s, or have you come to the conclusion that you're not good enough to use those?
Oh, I've come to the conclusion that I can't see them, and I lose too many balls that I shouldn't lose just because my eyesight is very bad. So
Strazza hits it into the trees. He's like, I swear to God, it was in the middle of the fairway.
I'll lose them in the fairway sometimes. My eyes are that bad. I didn't see where it landed. So I played like the dual colored balls. They're very obnoxious. They're like pink and yellow, but you could see them spinning up there. So
whatever helps, man. You know what I'm saying? Whatever helps. We got Ari Wald in the house,
My
which
balls,
is
I like
better
that.
than us.
Yeah. Anyway,
Before Ari, let's go over some other headlines here.
Please.
We might as well stick with earnings, right? So we had Dick's and we had Chewy. So Chewy up 14%.
Wow.
In pre-market
Nice trade,
this morning.
Strazza. Nice trade, buddy.
thank you.
Yeah, so 14% for Chewy, a beat and a beat. And what do they also do? They announced a buyback of $500 million.
That's fine, but it's also
Is that a lot? Not really, right, Strazza?
no.
Yeah.
This company, listen, it's not nothing. What did Robinhood just announce? Like 1 billion buyback?
A billion. Yeah.
Billion buyback. It's not terrible, but Chewy makes like $11 billion a year top line. Okay. Their gross margins are almost 30%. Phenomenal. That's why people were really excited about this company when they came public. Their net margins are like 1.5%, 2%. These guys just take everything. The employee comp is absolutely out of control. That tends to be the case with a lot of these startups. So they're just not dropping enough P&L down to the bottom line, letting it hit earnings. So I think a buyback is fine, but they really need to kind of trim up their cost structure more than anything. You can't have a gross margin of 30% and a net margin of 2%. That's bad leadership. So hopefully they figure that out. But the sales are there, right? They're growing steadily. People love the Chewy. I'm ordering it like every other week. It's fantastic. So
yeah, you use that a lot. I mean, I see it in my neighborhood being dropped off constantly. I don't have any pets, but
yeah. Everybody, I mean, it's a good service, and they'll figure out the financials. I think the bigger point about this one is this setup, right?
Hold on, can you explain to me, for us ignorant folks that don't have pets, why do you use Chewy and not Amazon? What's the reason for that?
So they have better quality, right? A wider diversity of products. So I get the cat's flea medicine on there also. I don't think I could get that on Amazon. You can do like the subscribe and save deals. You're not paying for shipping, so it ends up being either the same price as Amazon or even slightly cheaper. They're giving you specific deals, and they have a wide range of products. So, yeah, I think most pet owners just use Chewy. You end up saving.
I mean, I see it all the time. I see it. I mean, all over my neighborhood.
And it's just good, right? It's just a good platform. You have it on your phone. It reminds you when your kitty litter order is coming up, and yes or no. So, yeah, solid.
That's cool.
Bigger point than any of that, though, is the 20% short interest.
Yeah.
We're hooking higher. This is such a squeezy setup too. Hooking back above.
What was that?
Yeah, right?
Mm.
We're trapping the bears down here. Take back that VWAP. I think you're going to see the squeezes on. What are we up here? We were up like 10% before we started the show. Is that still the case?
More.
How much? 15?
Yeah, we're up like 14% here.
Yeah.
13,
14%
14%.
change.
Yeah. I like it. I don't know where my target is. Let's see if the squeeze mechanics can get working and we could get some real momentum.
Yeah, because that's a big thing, these high short interest names and stuff like that. Like Strazza always makes a good point of this. Like when they get going, they get going. Like it feeds upon itself.
Yeah. You don't want to sell strength, right? You want to just let them go. You don't know if they're going to be up another 20, 30% the next day. And then one red candle or something like that, as soon as that short-term momentum fades, then you want to be out. But
yeah, because think about it. If you're going to be playing something like this and you're going to be buying a real piece of crap, there's a reason why these names have high short interest, right? I'm not saying Chewy specifically, but generally speaking, if they have high short interest, there's a good reason for that. They're usually not the highest quality companies, right? People are, what is it? The dogs are circulating, right? The scavengers are coming around, right? They're seeing blood on the streets, if you will. So if you're going to take the risk in being something like that, you might as well get paid for it. So to Strazza's point, let them run. If you're going to make a trade in one of these high short interest names, like it's not like, oh, there's the pop, fade it. Like you want to see it feed on itself. Like you want to take advantage of the dynamics that are taking place behind the scenes, right, Strazza?
Yeah, absolutely. And you're going to lose a lot, right? If you're like trading a short squeeze strategy, like you said, you're going to be dabbling in a universe of very low quality names that are typically in downtrends. So when you do win, you want them to count. So you want to let them run.
Yeah, when you do win, you want them to count. Same thing with like these bullish momentum divergences, and stocks making new lows. Like if you're going to put on that trade, at least get paid for it, Yeah.
I bought calls and common. I'll probably be out of the calls today. We'll see what we do with the common.
I want to hear what Ari Wald has to say about some of these intermarket implications. What do you think he's going to say? Are you taking bets?
Yeah, I believe Ari was the one who said last time, and I thought it was great. And double check, because it might have been one of our other very smart friends, but he made the same point that we've been making about kind of like we need resolutions from these ranges, from dollar and rates, before we have some sort of, grand thesis about the impact it's going to have on risk assets. I think as long as we're range bound, these intermarket headwinds or tailwinds, we're not going to see too much of an impact from them.
Let's find out.
Is Ari here?
Yeah.
Bring him on. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Ari.
Good morning to the morning show.
What's up, Mr. Wald?
I'm hanging in there. Thanks for having me back.
Dude, you are always welcome on this show. We're always curious on your thoughts. We take bets on what we think you're going to say.
I heard some of that. This is the start of my new monthly rundown with you guys. I love it.
Oh, is that what we're doing? You have a regular spot now?
I'm a regular spot now. I asked for it last time I was on. Said, guys, I want to be a regular. Spencer came through.
I don't know if I approve that. I don't know if that's
we didn't ask you.
I don't know if that's been approved yet. All right.
I was trying to match your guys. I was about to come in a tank top, but I'm trying to dress it down a little bit. You guys are casual.
Dude, that's like Strazza. No sleeves required rule. What I want to hear what's on your mind, but a couple of the debates that we've been having, not so much debates, but kind of, questions that we all have. The beauty of technical analysis, it's not that it gives us all the answers. It definitely does not. But technical analysis certainly goes a long way in helping us ask the right questions, I think. And I'm always asking questions, Spencer, throw up slide 2 here for Mr. Wald, who I know is intimately familiar with this particular predicament that the United States stock market finds itself in. Mr. Ari Wald, quite a market historian, can speak to this better than me, I think. Talk to me, Ari. Tell me why this doesn't matter.
Dow Theory. Well, of course it matters. It's a century-old, stock market wisdom right here. I think the key is how we utilize it, and are we interpreting it the right way, or are we interpreting it how it was initially intended to be? And I think it does speak to kind of how we've been framing it more recently, especially after last week's action. I think was notable. There was a key reversal day in the market on Thursday. And, what we're trying to ask ourselves, well, is this just going to be another short-lived trading top, or is this going to be a warning of something more ominous? And as it stands, our takeaway is that it's just going to be a short-lived trading top and could be a little bit of additional near-term downside. But the key point being market potentially bending here, but not broken. And we've been getting a lot of client concerns, and one of which is exactly this chart right here. The divergence in the Dow transportation average, and is that signaling a bearish sign based on Dow Theory? Well, I think it's important to know what is Dow Theory, and what we continue to come back to, it is not a trading signal. It's important to remind clients that this is trying to identify the market's primary trend measured in quarters to even years, the cycle at large, bull or bear market cycle. And so to get a change in that signal, you need a divergence like this, but you need breakdowns in both. And we actually, it was a divergence and a breakdown in the transport. So you have one part of it, but as long as the Dow Industrial Average is above that April low, the primary trend is still positive and nothing changes.
Ari,
and this
let
would just
me
be another.
Let me stop you right there, Ari.
Okay.
Why would you say that transports broke down? How would you quantify? Like, how do you define that?
Sure. I think the secondary moves, I believe it has to be at least 3, maybe 4 weeks. There's a duration aspect to it, ideally moving, I think, 4 to 5%. So from a confirmed, let's kind of move backwards. The theory was last confirmed summertime a year ago, July 2023. You had the secondary correction in the third quarter that bottomed in that October-November period. And then a resumption of strength where the Dow Industrials made a new high, the Dow Transports did not. So that was the divergence. I would argue that the move down from March into April for the Dow Transports broke below the January low point made in early 2024. And that was enough to signal a lower low on a closing basis in the Dow Transports. But that we never got one in the Dow Industrials. You need a breakdown in both.
Are we getting cute? Are we with this 130-year-old indicator built by a journalist? Are we getting cute, or you think this is still spot on?
Well, I would argue, it's make sure we're interpreting it the right way. It's not a trading signal. As it stands, primary trend is still positive. That's it. End of discussion. Now, with that said, I would argue that the relationship between, or as I call it, the new Dow theory, the relationship between large and small cap stocks has become more important currently versus 100 years ago than that between the relationship between industrials and transportation, just given the forward-looking tendencies of market breadth. I think, let's say the S&P 500 and Russell 2000 would be, two more important benchmarks to watch in this day and age.
So you would put the Russell 2000 as the new Dow theory, as opposed to the semiconductor index. Spencer, throw up slide 5. For me, this is new Dow theory. and it's not an or, it's an and, right? This to me, and I've spoken with a lot of our friends about this, and again, we don't necessarily know the answer. It's just one of the questions we like to ask ourselves, and usually the answer is I don't know. So we do both, and this is just a classic example of us doing both. So you would put, and I mean, I would put you as an even more of a market historian than me. I mean, I really would. I think that's saying a lot. You would put you would put small caps as the new Dow theory over semis?
S&P 500 and Russell 2000 is perhaps my favorite. If I were to create a new Dow theory, it would be between the S&P 500 and Russell 2000.
Wow.
Because you're getting a broader slice of the pie that way. Semiconductors, I get it. It's a very cyclical area. So are banks. So are industrial. So are pockets of consumer discretionary. I would probably look for a broader gauge of cyclicals, maybe a high beta index as that. I mean, I get it. Semiconductors are important, and probably
don't remember what Charlie Dow said. Charlie Dow said you got the companies that make the goods, and then you got the companies that deliver those goods, right? And which is, there were railroads at the time, and then ultimately automobiles and airlines and whatnot. We deliver a lot of our goods and services via internet and semiconductors these days, right? So that's how that makes sense to me. So it's fascinating to hear you say that. I think I'm hearing that it's more of an and, not an or,
right.
More of a weight of the evidence, which is one of the things I love about you. But you did mention discretionaries, and Spencer, if you can add slide 4 here, consumer discretionaries, correct me if I'm wrong, pretty important historically to the market here on a relative basis, on both a market cap and on an equally weighted basis, making new 52-week lows. What do we think about that?
Right. So again, and the final point of that, it's just essentially, are we market breadth being important to me? And again, my emphasis on the Russell 2000, but of course, important to key on market leadership and how are these cyclical areas acting in the market, and relative performance as well. So again, note you're showing me relative line, and as I always say, as for all these metrics, for the most part, it's absolute participation more important than relative leadership. Perhaps the only relative leadership that really matters to me would be that of looking at an offensive versus defensive benchmark, high beta versus low volatility. So while, and you are showing me the equal weighted discretionary sector, which kind of removes the bias of the higher growth areas in the cap weighted relationship, because that cap weighted ratio is just showing me how strong the S&P 500 is, rather than necessarily how weak consumer discretionary is. And so that equal weighted discretionary really hasn't worked throughout the cycle. I would still argue that it's the weakness in the defensive areas that is most pronounced here. So growth is outperforming versus value. But if you look at the value benchmark, if you were to divide that by, there's two pockets of value. There's cyclical value and defensive value. And so let's take the Russell value and divide that by S&P low volatility, which captures some of that defensive value. It's Russell value is outperforming. It's defensive. It's less so discretionary that's notable. It's the breakdown in consumer staples that I'm seeing. Healthcare. I would argue the balance in utility should be sold. REIT's still weak to me. So generally speaking, I still think that the relative ratios still speak more offense over defense.
Throw up the that slide 11 there, the offense versus defense, and the so here we're looking at high beta versus low vol. We're looking at junk bonds, looking at small caps. All these are near and dear to your heart, Mr. Ari Wald. Correct me if I'm wrong.
This is all big parts of what we're looking at here. So
sideways, not up.
Sideways. Which way are they going to break? What's interesting, right? High beta and low volatility have each underperformed versus the S&P. It speaks to the strength and growth, the growth factor right now.
Yeah.
But this would suggest that high beta is actually still holding up versus low volatility.
It's not underperforming.
Right. It's sideways. So you're saying, so which way does it break? I still want to be open to this upside breakout. High yield corporate bonds, is that a spread, or am I just looking at that?
That's absolute.
That's absolute, right?
Price only.
Right. But if you were to look at corporate bonds versus how they're trading versus treasury bonds, I would say generally credit spreads still haven't ballooned out in a manner.
Oh, is there a denominator fallacy there, Mr. Ari Wald? Because the denominator can't go up?
Well, no, I think that's how I look at, the implications of rates and corporate bonds are how they're trading relative to treasury bonds.
I'm with you. I agree.
Yeah.
I'm asking if the fact that the denominator in your particular fraction continues to decline, you know what I'm saying? Like, is there an element of the denominator fallacy there? Is all. I'm just asking.
Well, that's a part of it. Are we just talking about rates overall, or what's in, again, looking at that versus treasury speaks to that offense versus defense dynamic, which kind of strips that out. And then, of course, small caps, which, again, absolute more important than relative. We're in a large cap led cycle, probably both in the intermediate term and longer term. I'm fine with that. We've seen that before throughout the 80s and 90s. We still need small caps to participate. So we're at they're again trying to in trouble breaking through this 2-year base that they've been in. If you were to extend that back really since the start of the bull market, probably one difference so far is that at least on the downside, they've been able to hold the 200-day average. That's 2023. They had these very wide oscillations throughout the year. This time around, on that initial Q1 pullback, held the 200-day. Where again, we're at a point where they can't break through. Not there yet, but I want to be open to what could still be this broad-based breakaway that we haven't had throughout the cycle.
All right, Mr. Wald. Last question. Throw up, and then I want to talk about what's on your mind because I'm being very selfish here. But that's how we like to roll around here. I have Ari Wald on the show, so I wanted to throw out some things here. Your thoughts. So these sideways ranges: value line index flat, small caps flat all year, high beta low vol flat all year, junk bonds flat all year. I mean, we could go on and on and on. This has been happening in an environment. Throw up the bonds and yen chart in slide 12, Spencer. All of this has been transpiring as bonds have been falling off, yen had been falling off. Do you think that's a coincidence? Or do you think that this has turned into a little bit of a headwind while in the fourth quarter during that face ripper, both of these lines were going up?
Well, I think Strazza quoted me, got what I was going to say correctly on the intro, and I think he framed it even better than I was going to say. That generally speaking, I'm a big proponent of intermarket stability, good for stocks, and that's exactly what we've had.
Yeah.
I'm used to looking at more 4-year weekly charts rather than kind of 4-month daily charts. I think it's important.
A little too short term in Q for you, Ari?
A little too short term.
All right.
No moving averages on here. I mean, this pullback could just be within the confines of just how they've traded in recent years.
Ari, we're adults. We're adults. Do we need smoothing mechanisms to tell us what direction these things are going in? Come on.
Well, I think it does help define time horizon. I mean, if I'm thinking in terms of more intermediate term swings there, I think a 200-day average does a pretty good job of capturing.
You're such a classic technician, Ari. So classic, buddy.
Well, you can. Well, here's the issue, right? We're changing time horizons. We're creating the narrative that fits what we want here. I don't
want anything. I don't give a damn. The market could crash tomorrow. We could go Dow 60,000. I'm good either way.
All right. So Treasury bonds, right? Treasury bonds. They probably have to. Again, I'm thinking in terms of rates, and bonds probably have to stop going down for equities to take off. Again, it's about intermarket stability, but obviously, you're right. It's been this recent uptick in rates and lower bond prices that have been a near-term headwind. I'd argue that there's been a certain resilience to the tape versus prior occurrences of seeing that, which I guess would be my positive spin there. But yeah, there has to probably be some stability here, and that'll allow the equity market to take off again. And I think that setup is still there.
What you're saying is not a coincidence, is what you're saying.
No, I see what you're saying. But again, it's a counter trend. Still, it's still
not counter trend for bonds though, or yen.
I would say that the longer term trend is still higher for rates.
For rates,
yeah,
so lower for bonds,
lower for bonds,
and lower for yen.
Lower for yen.
So both of these, even though they're a 5-6 month chart, the trends are down.
And what would you say?
Over that. When I think of about a 40-year reversal in treasuries, rates reversing 40-year downcline, bond prices the other way, I don't think a reversal has to be from down to up. To me, this reversal has gone from down to a sideways consolidation range.
That's right.
Would you say the dollar is sideways too, Ari, in this range?
Yeah, I have the DXY on my other chart right there, and it looks exactly like that to me, kind of flirting with the same levels it's been flirting with since late 2022. And again, that's created this not too hot, not too cold backdrop for me. We've had range-bound currency translating to stable consumer pricing, which I think is a positive for the equity market.
So we start calling these things headwinds if we have a Dixie above 107 and maybe a 10-year above 5%, if they're back above the highs from, I guess, Q4 of last year.
Yeah, especially for the reasons that they're moving higher for interest rates, especially. But yeah, generally speaking, it's not high rates or low rates, but stable rates, which is the biggest positive. I mean, if rates start moving higher because economic growth is coming back versus the risk of runaway inflation as it was a few years ago, I would argue that rates can move higher for the right reasons. And in fact, before you go back when we were still in that zero interest rate policy regime, it was higher rates that coincided with the more risk on behavior in markets.
I think this is so important because the narrative continues to be that either the market's pricing in lower rates or the market needs lower rates for stocks and risk assets to continue to trend well. Maybe there's an environment out there where rates are actually ticking higher, and that's conducive to higher prices for risk assets too. I think that's not something that's being even considered by a lot of people.
That makes a lot of sense for us. We've seen that before. I mean, again, that's kind of the 50s and 60s analog, where if rates are going up because economic growth is robust there, stock prices should do well.
Yeah. And on the other side of that same coin, if rates start going down too much, you have to start to wonder why. And that could
that's a great point. And right, I'm not making that call. I don't expect that type of move. I think we are in a later economic growth backdrop. But with that said, right, and my follow-up is always be careful what you wish for. By the time we get lower rates and treasury rates start breaking lower, I mean, that could be the market signaling more imminent recessionary risk, and that could be closer to your market top scenario.
Right.
Which is what I think.
Do you care at all about these like jobs, like unemployment, and how this is supposed to be like an indicator for recessions, and then you got the yield curve clan over there.
Like the jobs chart that you showed me yesterday.
Which one? The jobs chart?
The unemployment rate.
Yeah, hold on. This is an indicator I was not aware existed. This is apparently, look at slide 39. This is apparently the Piper-Sandler recession indicator. When the 3-month simple moving average rises above its level from 12 months earlier, equals recession. And it's foolproof and works every time. Ari Wald, is this time different?
They didn't say it's foolproof and works every time.
No, I added that part. But
right. Why should I look at this when I can look at the stock market?
I don't know. I'm asking, bro.
Well, that's right. Well, again, what are we trying to forecast? The economy or the stock market? if you're trying to forecast the economy, fine, but we're trying to forecast the stock market. So make sure you get it right. Guess what a leading indicator for the economy is? The stock market. I could look at the stock market and tell you whether or not there's imminent recession risk. Guess what's going to happen when that recession's around the table? Stock market's going to be pointed lower. I mean, if we're still talking about this after what we went through 2022, that the stock market leads the economy, I don't know what it takes for everybody. You had an inversion in the yield curve almost coincidentally with the bottom in the stock market, what proved to be one of the best buying opportunities in recent years. So again, I'm going to look. These are great charts. I could look at the S&P 500 as well and get a pretty good sense of whether that recession is at risk as well.
Ari, you see how I just throw you alley-oops and you just bring it home, baby. You see how I do that? Just feeding you. Just keep feeding them and feeding them.
You were like Luka Doncic. They're throwing it up to me last night.
Oh, something like that. A much slower, less agile. Ari, what are you thinking about? Like, these are the things that are on my mind, kind of from an intermarket perspective, kind of trying to help me figure out whether we want to be looking for stocks to buy, whether we want to be looking for stocks to sell, which sectors to be focused on. Like, that's how I think about this and why I brought these questions to you. What's on your mind?
Look at this guy. Seems like market is beginning to point down. If Ari shortened his time frame, he would see this clear as day. He's going to miss the first half of the downturn. Think I'm not looking at that? You think I'm not looking at that? I'm looking at that. I see what's going on. I see the reversal day last week. You reading my reports? Do you know what I'm saying? You don't know what I'm saying.
It's noise.
Great,
right?
We need that. That's why you're a regular on the show, Ari. Blue Maserati.
I approve the regular monthly slot, JC. I don't know what you're talking about. Ari, you can come back every week, brother.
That was a joke.
Ari's
one of my faves.
Bent but not broken. We get it. There's markets probably due for one of these bull markets don't go in a straight line, right? There's going to be ebbs and flows along the way. Again, this little bit of a downtick, is it going to be a short-lived top or something more ominous? So I go through the checklist. I see a lot of indicators coming off confirmed readings. Advanced decline volume line coming off a new high. Advanced decline issues line coming off a new high. Stocks above their 200-day average coming off a level of 68%. We found that readings below 60% generally more of a good indicator of a market top as far as undermining that possible final peak. Credit spreads still generally stable. A lot of the intermarket trends, offense versus defense relative ratios, not really breaking down. So for all those reasons, I'm still siding with the roadmap that the bull cycle, which is again what I'm trying to. I can't get my clients in and out like that. I can't say sell now, let's buy back 3 weeks later. I think that just sounds like a headache on top of that as well.
And then let's also remember, let's take a step back for a second. We all have different time horizon. My suspicion, I don't know for sure, but Mr. Maserati of the blue rendition might have a different time horizon than Ari Wald's mutual fund manager clients, right? Is that a pretty safe bet?
Perhaps. Again, I'm unsure about his market time horizon.
It might not even be a him.
Whatever it might be.
It might be a Mrs. Maserati.
70% of bull market cycles last to their 2-year anniversary. And so with our indicators confirming that roadmap rather than denying that, I think market conditions are still ripe for continued gains. And then we could look for what is more of a typical market top in the post-election year as you get into the third year of a bull market. And I think the divergences at that point would be more concerning. And right now, again, you have to really look at these very short-term time periods. I think the longer the divergence, the more concerning it is. Right now, those divergences are measured in days to weeks here.
Last question. NASDAQ composite, new all-time high yesterday. 4,000 plus stocks on the NASDAQ. Only 140 of them made a new high. Does that matter?
Breath is improving.
I always hesitant to look at. Again, I'd have to look at the chart and tell you if it is concerning. Again, generally speaking, breadth based off the NASDAQ composite is just going to have a bearish bias through history. Pretty much always diverging. If you want to make a bearish point, just quote something, based off NASDAQ composite breadth.
There were 80
that,
on the New York stock. There were 80 stocks that made new highs on the New York Stock Exchange.
There was subtle divergences there. Well, look at let's go back to my S&P 500.
I'm asking.
Russell 2000 relationship. Right. No, Russell 2000 did not make a new high, getting back to market breadth. My new Dow Theory, Russell 2000 didn't make that new high. So there was that divergence there. But there were, let's see if it can correct itself, or if we start to see some more concerning breakdowns. I would argue there really hasn't been any. I always talk about a culprit sector. There's usually one area that's breaking down ahead of everything else.
Can you touch on that? Because this is something, I don't know if you stole this from somebody or you ended up with this on your own. Because I definitely stole it from you. I know Mike Hurley often, and when I steal, I tell you, I'll be like, oh, this is an Ari Wald thing. But it make,
hold on, Jason.
Mike Hurley also likes to quote this on you too. This is a great point. And before you run, can you explain this? The culprits, bear markets, severe downtrends, they have leaders that are dragging the market lower, and there just isn't that group currently. Can you talk about that?
Of course. Well, we got to this. Let's say how we got there. We like to look at market dispersion, right? The spread between top performers and bottom performers. And when it gets wide, people get, excited and think it's a warning. Then we broke down the pieces of that. And what we showed is that as a forward-looking indicator, it's not when a particular area of the market is getting too hot. That actually is an indication of oftentimes strong momentum, and as in terms of market implications, you'll typically continue to see strong gains. But when there's one group that gets too weak, it has had negative implications for the market. And so what that is telling us is that not only does internal breadth typically narrow into a market peak, but it's typically concentrated in a particular area as well. Our indicator was based on just the rolling return of the worst performing S&P sector over a prior 12-month period. And we found that there's usually one sector already down close to 20% into a market peak. So you can think back of 07, 08, it was banks breaking down ahead of everything else. And so that's what we're kind of going to be keying on, is that there's usually kind of this culprit area that is the canary and kind of drags everything lower with it. It was growth stocks, small cap growth breaking down in 2021. It peaked early 21 and was already starting to move lower ahead of everything else. And so right now, as I kind of look through all these benchmarks, there's some subtle divergences, but really just that, no major breakdowns in any particular industry groups.
But you do have a way of kind of identifying or I guess narrowing down your list of who those sector culprits are likely to be just based on the weakness ahead of the top. So who are you looking at right now and thinking to yourself, these could be the culprits, these could be the culprits? Is it the growth stuff again?
No, it's not. Right. Again, that gets back into, it's not growth. Growth is, we continue to argue that the steadiness of growth is underappreciated of the NASDAQ 100. We've seen the long-term rate of change levels nowhere close to what we saw in the late 1990s. That the outlier here is, again, how weak the rest of the market has been. The non-growth areas, value, small caps, world equities. So I'm keying on the Russell 2000. Again, that's the area that has held back broader breadth readings.
Yeah.
And so we're kind of in this point where, again, they're weakening. They haven't quite broken down. In fact, they've held up better than a lot of the downturns we saw even in 2023. But if there's going to be some sort of a warning, I'm going to be looking for a breakdown in the Russell 2000 first and foremost.
I love that.
Why do you keep saying Russell 2000 and not small cap 600 out of curiosity? Because bigger, more names?
Bigger, more names, just a more popular benchmark.
And it doesn't
really.
But
weren't you just hating on the NASDAQ because it's full of a bunch of pieces of shit? So's the Russell 2000. No, I'm asking.
Looks the same as IJR.
This isn't the Cartoon Network. We're just going to be throwing you easy questions, Ari. We're bringing the tough questions, buddy. We need you on that wall.
Yeah, no, I think you probably get a very similar message from the Russell.
You do.
From the S&P 600.
You do.
I would be very right. If the S&P 600 was doing something, was acting much stronger, and I was continuing to quote the Russell 2000 as a reason to be bearish, then you could come back to me and
Yeah, they look exactly the same. You're right. All right. I tried to get you. I couldn't. You're right. Ari Wald, ladies and gentlemen, the man, the myth, the legend. Are you ever in New York City anymore? Like, are you just baseball games every night? No more city for you? Is that the situation?
I'm in there here and there. I'll be in a couple weeks there, but
Let me
yeah,
know
no,
when
for
you're in
sure.
town. We'll grab beverages.
Still in the city, definitely. We'll let you know.
Cool. All right, Ari. Be good, buddy.
Talk to you guys soon. Bye now.
Adios.
Strazza.
He's the man, dude.
Yeah.
He's the man getting all fired up with blue Maserati. Saw that? I
was
love
awesome.
that.
I've never seen that, Ari.
I've
was
never
good.
seen an Ari either.
I gotta
And
see.
by the way, it definitely was like a fake Ari. Like he's
that's
just
funny.
kidding.
Um,
he can't even get all fired up with a straight face. You know what I mean? Like he does it with a smile on his face.
we are so lucky to have a guy like that just come here and be so generous with their time. He would have hung out for another 5-10 minutes if we wanted him to. And he's gonna be on every month. Wow, what a treat!
Amazing. Love it. Absolutely love it. All right, guys, listen, I gotta go. I have a pre-K graduation to attend. I will see you guys later.
Congratulations.
Congrats, Alexandra. That sounds awesome. Is she excited?
How do you know I wasn't talking about me? No. Yeah, she's great. Everybody, she doesn't even know what the hell's going on. She's 3 years old. So I gotta go, guys. I love you guys. We'll talk this afternoon. We're gonna be putting on some trays later on this afternoon. Looking forward to that. Adios.
Peace. What's this afternoon?
I have no idea.
Okay, I don't know if there's a thing I'm involved
No,
with.
I don't know what he's talking about. We have Mary here, but before we bring Mary on, I want to rip through some other things that have happened. We have some more news.
Finally get to the news. I dropped some stuff in this morning.
Yeah, ConocoPhillips, yo. ConocoPhillips is buying Marathon Oil in a all-stock transaction valued $22.5 billion. If you are a shareholder of Marathon Oil, you will receive 0.255, again, 0.255 shares of ConocoPhillips for every share of Marathon that you have. So these things will now trade in lockstep in accordance to that ratio until the deal closes, whenever that is.
Yeah.
And more consolidation.
And so this is the MRO, not the MPC. Marathon did spin off years back, and they are buying the E&P business, which is MRO, not the refining business, which is MPC. We talked about really since last year, Spencer, that we were going to see more and more M&A in energy, and we continue to. This is really healthy. The M&A landscape for the energy sector, really this has been going on for 12 months now. But the big guys continue to get in there and try to gobble up more and more space in the most coveted oil fields. So that's all this is. Just another one. We saw, what was it? Hess get bought out. We saw, was it?
And that got approval yesterday, by the way. So that's happening.
Yeah, and it wasn't EOG. What's the other one? Pioneer got bought out, correct? We've seen so many of the names in our universe, particularly E&P names, be the targets of acquisitions over the past 12 months. Very healthy stuff, right? Speaks to a bull market for the whole group. Want to see more of it. Want to see more of this in biotech and banking and some other sectors. But this all bodes very well for the energy bull thesis. What else do we have? You want to update us on your teeny bopper indicator?
Yeah, someone in the chat's talking about Actually, we do not have an Abercrombie & Fitch chart handy, but the stock was up. Yeah, I know.
4 or 5%.
But yeah, it was up last I checked this morning on its earnings report. So same with Kava too, right? They're all
Kava. I saw the reaction.
Kava's down
this morning, but it was a nice beat from what I could see. I think it was something about same-store sales, so that's important.
Yeah, Kava down, Abercrombie & Fitch up.
Chewy holding gains here, up about 20%. I'm gonna be out of half of my calls right now. That's great. Okay. One for the good guys.
All right, couple more headlines.
Yeah.
Yeah, Robinhood buyback $1 billion. American Airlines came out and lowered their guidance, or they gave lowered downbeat guidance today. So stock was done on that. Elsewhere in M&A land, we had a report yesterday from CNBC, David Faber, saying that Google sniffed around HubSpot, perhaps.
Interested in this. I'm really interested in this, actually.
So
I think that chart looks
what the hell
fantastic.
happened to HubSpot yesterday? There you go.
That kind of a stick on the daily is just super bullish. So HubSpot engulfed. I don't know if we have the chart, but HubSpot engulfed pretty much its entire month of trading yesterday. I mean, that's just incredible with one candlestick, just about. So that, what a big move. Sounds like a deal's going to get done there. Mr. Faber's usually spot on.
He does have a good track record.
Excellent.
So, and then I was wondering what the heck happened to Celsius yesterday. And there is some commentary from, I think it was Morgan Stanley, I want to say, citing Nielsen data that I guess their week over week sales were down and their market share was slipping or something like that. But Celsius had a nasty candle yesterday.
Who was reporting that? I mean, this one is always getting picked on. This is a battleground stock. A lot of strong opinions from both bulls and bears on this one. Is that fair?
Yeah, I'd say so.
I'm out of the Chewies.
Nice.
Yeah, I mean, it's shit. Look at this thing just pumping. Sorry, I'm distracted. What else we got?
That's okay. That as far as news, that's pretty much it. Yeah, the buyback, $1 billion, right? Not nothing. And correct me if I'm wrong, Steve. I feel like we've talked about this like recently, right? I feel like we have.
What? Did you see the chat here? Did we talk about what recently?
The Robinhood buyback. Like you've said that.
Oh, that they could?
Yeah.
I don't know what else they do with the money, right? Well, I don't know what they would invest it in right now. In fact, when they're investing in like these stupid like linking their linking stuff to data and making like a technical analysis platform, all of the bets that they've made have not paid off. So I think buying back stock makes sense here. I think Robinhood still has long-term vision issues. It's one thing. They're going to grow during a crypto bull cycle because most of their transaction fee growth is going to come from crypto always. So they're always going to do well in crypto bulls. And then it's going to become a situation of now what? So I don't know. Times are good right now.
Hard to argue with the chart.
Yeah, no, look, the chart looks great. Chart looks great. I'd rather own Coinbase.
I know. Before we bring on Mary, JC just messaged us and said he wants to put on that straddle you guys were talking about last week. So I guess that's what he meant by we'll talk later. If you want to know what that trade is and see us put on the trade, the best way to do that is scan the QR code on the screen. That is a link to our portfolio accelerator program. We talked at length last week about this trade. I guess it wasn't put on yet, but he's going to put it on. So we have all the recordings, all the videos from last week up on our site, only available to members of our PA program. There is the code. Scan it, check it out, see if it's right for you, and talk to Mary about it. Speaking of Mary, actually, Mary's here right now.
Bring her on, and then I'm just going to discuss one of these crypto miners. Get Mary on here.
Good morning, gentlemen.
Good morning.
You had me at crypto miner. or crypto, whatever. You had me at crypto. What are we talking?
So,
Oh, gosh.
has everybody been paying attention to the bit farms? Spencer broke
Yeah.
the news for us yesterday's show. The relative strength stood out yet in yesterday's session, right? Which made me think maybe there's something to this report. And now again today, it's actually taking out the rumored deal price around 230. It looks like, and that's the level, right? That wasn't just the reported offered deal price from yesterday's M&A rumor, but if you drop a VWAP from the all-time highs, the all-time lows, the year-to-date highs, if you look at the price chart itself for a logical level of support or resistance, you have the August 2022 highs, you have the July 2023 highs. All of this happens right around 230. And we're there right now. I believe this one probably has a decent short interest. Actually, this one has a smaller short interest than most of the Bitcoin miners. But it's still going to have plenty of momentum when it starts moving. I think 230. I mean, this could be a great trade. This could be a great trade. And maybe they just balked at it, right? Maybe it was a legit offer from Riot, and they're thinking this is a bull market for Bitcoin. Why would we sell ourselves at such a crap premium? So it really seemed like a lowball offer and not something they would ever take. But still, just the price action following those reported rumors stands out, and it's been overwhelmingly bullish.
It's a very good point. The market will tell you if they think an offer is BS or not, right?
Yeah.
And this is
right. The market's saying
the market saying no.
Something here, I think.
Yeah, not BS. So
you like that one, Mary?
Cool.
230.
I do. Yeah, absolutely.
Yeah.
Good stuff. How about that hood, huh?
Look, they're doing everything right. I mean, I think the buyback makes sense for them. The cash flow's there, they easily support it. You don't want to start paying a dividend that you're not going to be able to service in the future. So I think buyback makes a lot of sense. And then they got to see, how do they do when the crypto bull ends? And that's the question for Coinbase too, right? No, it's where do we go from here? But this chart right now, there's just a lot of open space here. Wide open.
That's what you and I were talking about last week. Just not a whole lot of price memory now up above this 1650 and on up. Yeah. So I still love it until it stops working. I've been talking about this one for months just because I loved the space. And yeah, it's not an NVIDIA, it's not an AMD, but it's moving. And as long as the crypto bull market is going on, I think this one is going to be participating and it's got room. So I like that.
So what Mary's talking about, if you just look at this chart, right? Typically we'd put like a volume at price on this, but you don't even need it. You could see it. Look at the range from 20 to 40, just about 20 to 40, right? When we peaked and rolled over in 2021, we did not spend much time in that entire $20 price range, right? We just plunged like a rock. Now we're back in that space. It's what we call a memory gap or a volume pocket. It simply means that shares did not exchange hands very much at these levels. Tend to see
so it's really a reflection of time, right?
It's a reflection of price history, and here there is not much of it.
But the price history is a reflection of time. There's not a lot of time spent.
I mean, it could spend a year there, but if there was little volume, I guess it would serve this. It would act the same.
Fine.
Yes. Right.
But in Robin Hood's case, there's
it's
volume.
The speed or the rate of change at which that price area is moved through, right? And in this case, it plunged right through it. So not many shares were traded there. If you brought up a volume at price indicator that just shows you how much volume is exchanged at each price level, it would be almost non-existent, right? Now, if you threw up the volume at price where we have the arc drawn in this range from, I don't know, $7 to $16, you would see a ton of volume coming in, right? Because look at how much the shares have traded there. So look, we're there. We're above all the VWAPs. Everything looks great. I think this memory pocket gets probably filled pretty nicely. And I think this one has room to run. Again, it's about the crypto bull cycle. Right? What's going on with the cryptos is so important to these guys. Their revenue growth is not coming from equities. It's coming from crypto. That was the big report beat last quarter and the quarter before. That's what's allowing them to buy back shares. So
okay, from a fundamental standpoint, sure, but from a technical standpoint, is Hood just going to follow? I mean, Hood's not following crypto right now. It's outperforming.
This chart looks a lot like Coinbase. What are you talking about?
Coinbase, perhaps, but like crypto itself, right?
You're saying it doesn't look like a chart of Bitcoin.
I'm thinking it looks better. Does it not? Recently?
Recently, not when you zoom out. You know, it looks better than Coinbase recently too, but not really when you zoom out. They're catching up with the other crypto assets.
Dawson, yes, I would always feel insecure about a Robinhood credit card. Yeah, I don't know.
Yeah, we had ACDC, Josh, on our hot corner list today.
Oh, we did.
So I know you guys were already talking about Chewy. What I wanted to mention about Chewy, I actually got into this trade yesterday as well. It was kind of more of a YOLO. Again, Steve and I had been talking about this yesterday, and earnings being a possible catalyst. What I have particularly liked about this one is the RSI was showing higher lows over the last several weeks, and that was so that was all I needed to take kind of a YOLO gamble on this earnings this morning, and paid off. So you know, to Steve's point, this is one that has the tendency to squeeze. I love the squeezy names. I put on another trade right at the close yesterday that also pops up on our short squeeze list. That is CNX.
Ooh, I didn't get filled on the CNX yesterday. I'll try.
Well, I bought the common. I was not going options, but yeah. So I put CNX on yesterday at the close, and this one, I think. Do we have the chart?
No.
Yes, we do.
Oh, that's okay.
No Fonz today, Mary. So apologies, everybody.
Apologies.
Oh, there we go.
What do you mean?
Got it.
What do you mean?
there we
I got a chart right here.
Oh, fantastic.
Fonz is not on. Fonz is not chart ninjaing right now, is he?
No.
I thought I was talking
But I got charts.
Slack, wasn't it? Or was that you, Steve? That's okay. Anyway, so yeah, put this one on yesterday. This was one that we were talking about amongst the team of analysts, and you know, it's right there at that level of real defined risk around that 24, 23.50 even. You know, it broke out, came back and retested, was moving up again yesterday, and so this is one that this is just a fresh buy, bought right at the close. So this is the new one that I'm in.
No one should be surprised that we like this one, right? This looks like a lot of the ones we're buying. Chewy, that's slightly different, but it's about the squeeze mechanics. And I love what you said about RSI. I gave Spencer a little master's class on Chart Request Live yesterday. I think everyone should go and watch it, right? Because we really kind of dug into it, and we gave examples, both bullish and bearish momentum divergence examples. And the point I was trying to make more than anything was momentum divergences are going to form. They're going to be there. And a lot of times they're never going to confirm, right? They're always just going to be potential divergences, and they're never going to matter. And you're not going to want to pay too much attention to them. Where you do really want to perk up and start to notice a change in momentum profile is when price is making new lows consistently, like in the case of Chewy. If you follow along at home, if you got the chart in the RSI 14, price has been making new lows all year. Momentum, not only not making new lows, so it's diverging positively with higher lows, it's not even getting oversold. And on the last one, the all-time low that was made just in late April or May, early May, no, I guess late April, I mean, RSI barely got below 40.
Right.
And then you see today this surge, right? Finally, some buyers show up, and they show up in a big way because the sellers are tired. And that's what momentum was telling you, right? That selling pressure was really waning. Now we got an overbought reading today, just in one day.
It's crazy.
So that's some sweet technical action on that chart right now. I think this squeeze probably has some room to run from here.
I think so too.
Just based on the stats. I mean, people will be covering. You could see it right now. We started this morning up 5%. Now we're up 20. Right. So you're seeing it's happening today.
Yes, it's fun day. I'm also watching AMD. If you drop some VWAPs from, what is it, the March highs and then the October low, we got a pinch going on. And I got involved in this one last week as we were kind of getting above the 50. I'd have to pull up the chart. At any rate, I got involved in kind of my starter position, and I was going to add a lot more if we got above the high VWAP from March, which we did not. We closed right at that level yesterday, and now we're giving some back. So, you know, it's like I said, we're stuck in a pinch, and Maybe I'll be exiting this one sooner than I'd like, but this is one that's got my eye. Just with that VWAP pitch that's going on. If we resume up, I think this one has lots of room to go.
I love this one, and it's super actionable here, right at our level. I think you keep it really tight and
Yep.
take a shot. The boys continue to tell me I can't sell premium in this name, which does make me sad, but the calls are not too expensive right now. And I think, and I said it on our analyst meeting yesterday, I'll say it here for everybody, I think common stock is probably the best option for most people in this one right now. You could keep it real tight. You probably look back and say, wow, what a lovely entry I had here at the prior cycle highs.
Yep, exactly.
And that VWAP recapture that you have shown so beautifully on this chart, that can act as your confirmation, right? And that's
exactly
just a couple dollars away from risk level. So that's great.
Yep. So that's what I got today. No, JC wanted to talk Sonoma, but I mean, he's not here.
We can't talk about Sonoma if it's not here.
Well, we still can.
We could. Mary, what was your favorite part?
Gosh, quite frankly, the whole week was just phenomenal. I had such an amazing time. I should say that it was all the charts and everything that we discussed. But
I know what
quite-
Mary's favorite part was. I know what your
quite
favorite part was,
frankly-
Mary.
Well, actually, I know you think you know, but no, quite frankly, it was, it's what everyone has been saying. It's been getting together. And, with our analyst team, we are like a family. And now we have created this portfolio accelerator program where we are bringing new people into our family. And it's one thing to be able to, talk, on Slack every day and go to the meetings and every week with our analyst team and our members. But it's so fulfilling and enriching to meet people in person and, toast with a glass of wine or champagne and talk charts. Yeah, of course, we're talking business, but we're having a ton of fun doing it. So for me, that's kind of the most rewarding thing of this whole portfolio accelerator, these events that we put on, is being able to meet up with you guys, of course, also meet up with our members and really get to know people. Because I mean, all of us know trading can be a very lonely business endeavor, just because you're sitting alone in your office, like I'm here today. Luckily, I am alone because usually it's my kids that are driving me crazy, but it can be very lonely. And so having a community that you are talking with every day on Slack and meeting with weekly, virtually, but then also having the ability to spend time together in person, that to me is just game changing. And it's one of the reasons that I have loved being a part of the All-Star Charts community and stock market media community here for the last couple of years. It's what's changed me and made all the difference in my personal trading. So yeah, that's my favorite part of these events, just the community that gets built. And what I love is that our members that were in New York with us have so much more freedom now and feel so much more familiar with us, that it created so much amazing dialogue. Just the conversations around the table where we're all, grouped in one big circle and, just throwing out ideas and talking through trades. And I mean, it was so rewarding. And I can't speak highly enough of the experience. So if you're on the fence, scan the QR code, fill out the application, let's have a call and talk about what Portfolio Accelerator can do for you, because like I said, it's life-changing.
I agree with you. The conversations and just getting to hang out and oftentimes not talk about markets, but just talk about anything else is fantastic. And it's been nice watching like our All-Star Charts family grow over the years. I remember when there's 5 of us, and I remember when there's 30 of us. And now it's like we're opening our doors and we have this large external family that we get to hang out with when we do these things and see our friends like Brian Lund and Brett.
Yeah.
And it was a great time. Spencer, what was your favorite part?
My favorite part, actually, I thought, so Mary was going to say, it was this part right there.
Yes. This would be my second favorite part. This was my recess for, today, because I thought JC was going to be here. But so we've got Chateau Fibonacci, JC's wine that he's been working on for a few years. This is actually the 22 and the 23. So we got to try all of them. 21s, the original vintage, is going into bottles, I'm guessing, in the next few weeks. And it is perfection, you guys. It's just, oh, it is perfection. So that is going to be available very, very soon. So stay tuned. And then Kyle, our winemaker, also pulled, we taste these along the way. JC's been tasting them, periodically, just to kind of see how the process is going. So we got to try the 22 and the 23. And those are already tasting amazing. So we've got some fantastic wine coming your way very, very soon. Stay tuned. We had a lot of fun drinking a lot of wine.
It was
my
excellent.
life. I haven't tried pre-bottled wine. So
The wine everywhere we went.
Yeah.
And the sparkling.
The sparkling and the caviar, and it was a great trip. I mean, we work hard and sometimes we just play harder. So
Louis said yesterday his favorite part was the spa.
No, my favorite part, in all seriousness, was Sebastian, who was JC's grape guy, right, Mary?
He's great, isn't he?
Hearing
he's
that guy
a friend.
talk
He's
about
friends with
wine, it
Sebastian.
Yeah, I agree, Spencer.
Yeah.
was amazing, incredible.
The man knows his
Growing
wine.
grapes for years and years, decades.
I mean, he said something. He was trying a bottle of wine that Grant had brought from Australia, right?
Grant brought wine too.
And he took one smell. He took one deep smell, and he goes, "Is this winery from near the ocean?" And Grant goes, "Yeah." He goes, "I can smell it. I can smell the ocean air." I was how? How do you do that?
That was pretty crazy. Okay, it's got a little touch of salt. I'm like, what is salt? Yeah, you can taste the salty air.
Somebody was just saying the whole culture out there, like the way they eat and drink, like they're like trained to look for the flavors and the fragrances and all that jazz.
Yeah.
I can't do it.
Did you guys have any of those strawberries that night that we were at the Sonoma Square at the farmer's market?
I barely got to eat. A lot of talking.
Not
much eating for me.
I have a picture of that too. I had a strawberry the size of my palm. It was legit that large. And you would think, when you get those size strawberries at the grocery store, they're kind of just bland and watery. It was the sweetest strawberry that I ever had. And it was the size of my hand. It was epic. And it was local grown. Crazy. It's, I guess, the environment. I mean, we don't get those growing conditions here in Michigan.
I love all the farm to table stuff.
Yeah, it's wonderful.
All right, throw up my golf card and let's get out of here.
Yeah. No, what is this?
Reload it. No, reload it.
Oh, the other one?
No, mulligans.
No, they're both up there. You got two sides.
All right. Gotta give me a minute now. Just
everybody in the chat.
I'm putting it up.
Play 18 holes next time. Everybody joke. What?
Here, I'm putting it up. It'll take me like 30 seconds. So just describe what we're seeing.
You're seeing a superstar golf round. That's what you're seeing. I said, Mom, I shot a 78. She said, I don't know what that means. I said, it means I'm getting really good at golf. That's it. That's it. It's for everybody to say, take a picture of it, put it on your wall. I'm going to put it on mine. We have arrived. Arrived. I was just stroking, really feeling it. Still feel good about it. I played ass the next day. Didn't even matter. Didn't bring me down one bit.
Was this last weekend or was this with Stephen and Grant?
This was Sunday. No, Stephen and Grant. That was a tough one. Grant and I were swinging like children's clubs. But I played Saturday, Sunday, Monday this weekend. So
nicely done.
Too much stuff for me.
Okay.
I don't know. I guess we can't do them both. But that's it. That's it. The front and the back. That's all.
Well done.
I track my putts too.
Good job, Steve.
Where's the applause? Congratulations.
It's somewhere.
Thanks, guys.
Okay.
Thanks.
I tried.
All right.
That's it.
Hot corner, 1:00.
Hot corner, 1:00. Be there and see who. We didn't talk hot corner today, so you'll have a lot of fresh charts for us.
Yep.
Thanks to Ari Wald for hanging out. Thanks to Mary for hanging out. Thanks to all you for hanging out. Smash the like. Go make some money. See you.
Bye, guys.
Yeah, I had.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah. it's my time, think it's my